Okay, hi everyone. I thought I'd do just a quick little video to go through fiscal policy and actual versus planned budget outcomes because I thought it might actually be likely that you get asked a question around this in the exam. And we sort of rushed through this in class, so I thought I'd sort of go back on it and just give you a little quick review, I suppose, plus some additional information that might help. All right, so planned versus actual budget outcome. So first of all, let's just start with fiscal policy because that's the basis of it. So remember, fiscal policy is the use of government spending and tax to stabilise the economy. Okay, so we know we have a business cycle, goes up and down, up and down. The idea of fiscal policy is to help to stabilise that. So how do they do that? They do that through the budget. Okay, so every year they design a budget. And that is a combination of income and expenses. Okay, so budget equals income minus expenses. Okay, income sometimes referred to as revenue, okay, expenditure, and out of that you end up getting a budget balance. Okay, so budget balance, which we know can be a negative, which is a deficit, or a positive, which is a surplus. So, deficit or a surplus. Okay. What I want to sort of highlight differently, because you know all that, is that the deficit, a budget deficit, is a combination of a cyclical balance and a structural balance. Okay, so budget balance equals cyclical balance plus a structural balance. Okay, now I didn't really use those terms a lot, okay? So you might be going, what is that? All right, so cyclical balance, that basically relates to automatic stabilisers, okay? So the things that change automatically as a result of the cycle that we're in, okay? Structural balance is related to our discretionary fiscal policies, okay? So this is discretionary FP, fiscal policies, okay? So the government doesn't do anything here, it just automatically happens. Here, they make deliberate decisions and actions, okay? And that's the type of thing that you see head into the budget, okay? With the budget though, you know, they spend a lot of time on it and they forecast, okay? So they plan how much income they expect to have based on what they foresee the economy will be like and also the expenditure that they plan to take, okay? So last financial year, when they were looking forward, they were actually, you know, fist pumping, saying, yeah, things are looking good, all right? So they were thinking that tax revenue would be on the up, okay? Government spending would be on the down, because we were, you know, probably in this expansion phase, okay? So as a result, their budget balance ended up being predicted or planned to be a surplus, okay? Now, as we know, that wasn't the case, okay? So the actual budget balance was a deficit, okay? So let me just go through the automatic stabilisers in a little bit more detail though. Okay, so to help us go through how the automatic stabilisers help to stabilise the business cycle, I'm going to refer to the circular flow as well. Okay, so as we know, in any particular phase of their business cycle, tax revenue, so our T, can increase or decrease, and government spending, which we're really talking about welfare payments here, okay, can increase or decrease, okay. So when we think about if we're in a peak, okay, so if we're in this peak up here, we would have tax revenue would increase. Okay, so because more people are employed, so we've got personal income tax, we've got businesses making profits, so there's company tax, we've got more people spending money, so there's things like GST, okay, so lots and lots of tax revenue. And as a result, government spending, okay, so the G, actually reduces. So government spending goes down. So in a peak, we see tax revenue head up, government spending on welfare go down. This is real GDP, so this is, as we're heading towards that peak. And if we refer back to our circular flow, we go, okay, well, if tax is increasing, that's a leakage, okay? So money's coming out, government spending, there's actually less going back in, so that's decreased. So leakages are greater than injections. You might think, oh, that's weird, but ultimately what that does is creates less aggregate demand, okay? So aggregate demand actually decreases as a result of less government spending, okay? Less money coming back into the circular flow. And then on our business cycle, what we see happen is instead of it reaching this peak where it may be unsustainable, it actually just starts to taper off a little bit. So that's the automatic stabilising, okay? So it just automatically helps to stabilise the economy, so it's sustainable, okay? However, if we're talking about in a trough, which we're in right now, tax revenue goes down, okay? People are unemployed, there's less personal income tax, businesses aren't making as much profit, so there's less company tax, less spending, so less GST, okay? So tax, in this case, okay, is going down. Government spending, on the other hand, that is increasing. More people are unemployed, so they have to pay more unemployment benefits, for example. So government spending increases, and we can see that here, okay? So if we look at our circular flow, tax, okay, is going down, so that's a leakage, but government spending is going up. So this time, injections are greater than leakages, which means that aggregate demand is now increasing overall. Okay, and if we come back here, so this is our trough down here, aggregate demand increases, so it just helps to lessen the deepness of the trough, okay, so it just helps to stabilise it a bit better in the economy. Okay. So if we're looking at this particular chart where we've got our automatic stabilisers, we can see that automatically in times of recessions or troughs, okay, we have more government spending, less tax. That obviously results in a deficit, doesn't it? So automatically there's a deficit. Okay. In the good times, so an expansion, upswing, a peak where tax increases, government spending decreases, that results in a surplus, okay, so a budget surplus. That's without the government doing anything else, no changes to discretionary fiscal policies, okay, it's simply just the automatic stabilisers doing its job and helping to stabilise the economy. Okay, so as I was saying at the start, the budget balance is the cyclical balance plus the structural balance. Cyclical balance, solely related to the automatic stabilisers. The structural balance, discretionary fiscal policies. Okay, so if we use this year for example, yes, these kicked in. Okay, welfare payments went through the roof, tax revenue went way down. Okay, so it did put us into this deficit, but also the government had to step in. Okay, so we know, or governments have learned since the GFC that they have to take direct action as well to ensure that the economy doesn't remain in a recession for longer than it needs to be. So they had specific fiscal policies, discretionary fiscal policies, such as the JobKeeper and many different business incentives, okay, subsidies for Qantas, for example, as well. So all of that discretionary fiscal policies led to a structural deficit as well. Okay, so when we're talking about the outcome on the budget, we have to think, was it a cyclical deficit or a structural deficit? In this case, it was both. Okay, would we have had a deficit if the government did nothing, if they didn't have JobKeeper, they didn't subsidise Qantas? The question is absolutely yes. They would have ended up in a deficit anyway because our automatic stabilisers where we had increased spending on welfare and decreased tax revenue, led to a deficit anyway. The difference is that we've just got more of a deficit because of those structural changes, those discretionary fiscal policies that were also implemented in that budget cycle. So the planned budget outcome for the 19-20 financial year was a surplus. The actual budget outcome was a deficit, and it was a combination of a cyclical deficit and a structural deficit to the tune of $85 billion, okay, deficit for the 19-20 financial year, and predicted to be $180 billion for the 2020-21 financial year. So that's the difference. This current financial year, the planned budget outcome is a massive deficit, $184 billion. The actual budget outcome, well, we'll have to wait and see. Okay, so we have to get to the end of the 2020-21 financial year to look at the figures. So income minus expenditure, what will it look like? It'll depend on things like how long we're in lockdown, vaccines, okay, so the big news just this week that there possibly is a vaccine, okay, so all of that will determine our business cycle and if we can get a recession quicker than expected, the level of expenditure and so forth. Okay, so I'm hoping that helped you out with planned versus actual budget outcomes and the difference between a cyclical and a structural balance, and just kind of going into those automatic stabilisers a little bit more. I recommend in the textbook at the end of fiscal policy, there's a really good extended answer to do there. So I'll post that on the end of this video. Okay, all right, good luck everyone.